Welcome to Markets Now. I'm Michelle Rook with Tomm Pfitzenmaier of Summit Commodity Brokerage. Higher in the grains and hogs today, cattle futures setting back. And Tom, let's start off talking about corn and soybeans in particular. A very bullish report last Friday. And so were we still trying to digest that?
Well, absolutely, we are. I think everybody was caught off guard. We had great crop condition rating all summer. You had early harvesting, so everybody to assume that those November numbers probably had taken were going to be fairly accurate because we harvested the crop early. So I think that it really caught the market off guard that the USDA dropped that yield as much as they did, and I get why they did. I mean, the dry down was extreme actually in both corn and soybeans, and so there's a lot of shrinkage of the crop just simply from that, and I get it, but it really caught the market off guard because most people in the trade didn't expect it.
Right. We did make new highs for the move here today. The funds are already long in this market, though. So did they keep extending that position to keep pushing us higher or not?
Well, they're long corn for sure.
Right.
That's the question really, because their long position is comparable to what they tend to have in actually full-blown weather markets. Well, this Argentine dry period is, I wouldn't call it a full-blown weather market. It's kind of a mini weather market. And if it rains the last half of the month, like the forecasts are saying, then that's not even going to help all that much. And certainly this corn bean rate relationship is going to encourage the daylights out of farmers, especially north of I-80, to plant more corn at the expense of soybean acres. So, I mean, there's some things percolating here that are going to make for resistance. Now, one of the questions is going to be what are farmers going to do? I think a lot of sell orders got hit unexpectedly a little bit on Friday, so you had some farmers selling. The end users are pretty much bought up through the first quarter of the year. So again, are they going to be incentivized to continue to pay up, or is you going to start to see the basis erode as we go into the latter part of the winter?
And then, of course, the question is, do we get to $5 corn? Because if we get to that point, that'd be like $1.40 rally, wouldn't it, off the contract lows?
It would be. I guess you'd have to use that as your top side objective. I guess I'm thinking you're going to hit into a little trouble at 480. If you look at some of the technical indicators, we're really overbought on several things. So several indicators. So I think it's going to be tough, but you certainly can't rule out $5 if the funds keep getting excited here and keep buying. I guess I'd use that as my top side. And if you're trying to develop some kind of a marketing strategy for this, you scatter sell orders or buy put orders or whatever between here and $5.
New highs for the move in the soybean market as well, and we got some help from soybean meal. But my question is, was this fund short covering, or was this still digesting the report as well here?
Well, I think it was both. It was, I mean, we did have a drop in the soybean yield, which was a bit unexpected. So that was certainly a positive. And we had a 90, almost 100 million bushel drop in the carryout, which is certainly supportive as well. I guess the question is our exports going to fall off the cliff here as we go into I think what I read today, about 3% of the Brazilian crop is harvested, so we're just starting to get that rolling. They could have a substantially bigger crop. I mean, the USDA hasn't made any adjustments there, but I think they're going to have to in the February, March, April reports because I mean, there just hasn't been any adversity down there. So I think you could continue to rally a little bit, maybe 1080 on the March contract. I think it'll be very difficult to get up towards and even challenge $11.
Well, that took my question. I was going to ask you if you thought we were going to get to 11, if the funds were going to keep covering shorts. We have a lot of other headwinds, though. You talk about the Brazilian soybean crop being at a record level, but there's going to be tariff fears coming next week after inauguration, too, isn't there?
Well, you've got tariff fears. You've got the real making new lows, 22-year lows. You've got the dollar making new highs. Those currency differentials are going to number one, they're going to be a problem for us doing exports, but number two, they're going to incentivize the daylights out of the Brazilian farmers. And they haven't even, reverting back to corn a little bit, they haven't even started planting the safrinha crop. Well, this drop in the real is going to incentivize them to plant every acre they can to that safrinha crop. So, and plus planting more soybeans next year, especially if we have an acreage drop. So yeah, there's a lot of stuff percolating in that soybean market. Not much of it is all that friendly, except for the fact that the funds are short meal and soybeans and they're covering here. But that's not going to go too far, I don't believe.
Yeah. And meal was up today. Was that because Argentina's dry, or were we just unwinding some spreads between that and oil?
I think both. I think and you got fund short covering in meal, which is it's it's been moving a little bit and sort of in tandem with the soybean market. And you do have the dry weather in Argentina that's getting the back of everybody's mind. So I think both of them were factors there.
And we still have some uncertainty about 45Z. Obviously, it looks like maybe the tax credit for imports would be unused cooking oil would be not, they would not qualify. But other than that, there's a lot of uncertainty there about what happens with that, isn't there?
Well, the Biden administration is trying to make some moves ahead of their into their uh, reign of terror here, and are the Trump people going to eliminate that? Are they going to change it? Are they going to go along with it? There's just a lot of uncertainty. I mean, there's been a pretty good fundamental case for bean oil for a while now. I mean, bean oil is quite competitive. It has been against palm oil. So in that respect, it's been good. Exports have been unbelievably good. So I guess we'll have to see if all that is that a supportive side to the soybean complex um, or isn't it?
Wheat market was a little higher. Was it just trying to follow corn and soybeans, or was that short covering? Because we didn't really get a whole lot of fodder one way or the other in the report on Friday.
Well, Chicago wheat made new lows Friday, so
I
obviously
know.
they weren't too excited when everybody else is higher. So maybe a little catching up got done today. I don't really see anything that's changed all that much in wheat. I mean, it just got oversold, needed to correct, and it is. We'll see if there's follow through on the corn and the beans in the next couple days. Maybe that'll give wheat a little bit of a boost. It did all that move. Did turn a lot of the technical indicators back higher. It got oversold and those bounced back. So maybe that'll generate a little follow through buying too.
Do you think there was some unwinding of long equity, maybe even some short spreads over on the commodity side, including some of the grains like wheat?
I think that's been going on for the last week or so. I think uh, that jobs number on Friday made everybody a little uneasy about what is going to happen with interest rates. And all of a sudden you see, well, maybe interest rates aren't going to drop; they're going to increase. That has everybody selling equities, uh, reintroducing the possibility of um, some inflation coming into the market, which gets everybody a little more excited about owning a basket of commodities. So yeah, I think that was into play somehow. I don't know exactly how to quantify that in the soybeans and corn, but I think it was a factor.
And despite the equity sector seeing some pressure, cattle market made new highs for the move on Friday. Today, we didn't see follow through. Is this just kind of a healthy correction, do you think?
Yeah, I think so. I mean, cattle got quite overbought and needed to correct. So at some point, that was bound to happen. I guess I still think you could see the February contract take a run at its highs, maybe even take a run at $200 before this is all over. If you, especially to have some kind of a weather issue that would come along. That we just don't have the numbers in cattle. We aren't building them. It's just going to be hard to take it a lot lower except for a correction on the market that gets overbought.
Yeah. The weighted average, 5 area weighted average here today coming in at 202.58. So that was a record. So the futures have a little catching up to do then, don't they?
Yeah, they do, and they probably will. I mean, there's not a lot of reason to be bearish. The cattle market. I mean, demand's been quite good. The consumer. I mean, there's enough people working and have good jobs that they're more than willing to pay up for high priced beef. And so, I mean, you have to be, and like I said, we don't have numbers. The cow calf guy doesn't seem to want to expand much, so those numbers are going to stay light. That's a market that seems to me is going to be fairly well supported for quite a while here.
All right, we will end on a positive note then. Thanks so much. Tomm Pfitzenmaier, Summit Commodity Brokerage. That is Markets Now.